Very good afternoon to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's very important webinar that is on specialized auditing considerations and reporting. As we all are aware that we are having 800 series relating to the specialized standards, CSA 800 relating to the special considerations, audit of financial statements prepared in accordance with the special purpose framework, as well as SA 805 relating to the special considerations, audits of single financial statement and specific elements, accounts or items of a financial statement, as well as SA 810 relating to the engagement to the reports on summary financial statements. As we all are aware, these three standards are very important as for the specialized areas. And in order to tackle these three very important standards, we are having with us our today's learned speaker, Sri Rahisuddin Safi Saab. So on behalf of AASP of I extend my warm welcome to you, sir, on this Zoom platform as well as the webinar organized by AASP of ICI. We are fortunate enough that we are having with us our Honorable Chairman of Yamunanagar branch of NIRC of ICI, C. Sumit Chadda ji. So on behalf of AASP of ICI, I also extend my warm welcome to you, Honorable Chairman, Yamunanagar branch of NIRC, C. Sumit Chadda ji. Namaste, sir. Welcome to you.
Namaskar, sir. Namaskar. Thank you.
And we are fortunate enough that Sumit sir has kind enough as well as succeed to our request to moderate this webinar as well as the co-host as webinar. So thank you so much, sir. So before Honorable Chairman and Honorable Vice Chairman of AASB has stuck up in the meeting. So I request Chairman Yamunanagar branch of NIRC to please start the proceedings of today's webinar. Over to Sumit ji, please.
Thank you, sir. Thank you. First of all, I want to thank Auditing and Accounting Insurance Board, ICI, who have arranged this webinar on SA 800, 805, 810. I think these standards of auditing are very, very important from the point of view of current day practices, current day chartered accountant practices. For this, I thanks AASB for giving me a chance to moderate this webinar. I further want to thank CA Rishuddin Safiji who have given their consent for the same. Now I will introduce CA Rishuddin Safiji. Rishuddin Safiji has worked with many, have worked for many PSUs and private sector and have very vast experience in auditing and applying these standards of auditing. I also want to thank Chairman AASB CA Sanjeev Singhal ji in absentia and CA Vishal Doshi ji, Vice Chairman AASB also in his absentia. I request CA Rishuddin Safi ji to please start the session. Over to you, sir.
Hi, thank you, Sumit ji, for the brief introduction. And as you rightly mentioned, yes, this series is very much important for the professionals, right? And this is the need of the hours because there are lots of requirement from the user side or the management side to carry out these special purpose audits these days, considering the laws and regulations, and in the area where we are, working in a global environment where, one entity where we are doing the normal audit, they are having the nexus with the another countries also. So the requirements arise, and my special thanks to the AASB team, especially Anil ji, who is, putting the great efforts to, arrange these kind of sessions for the professionals at large. And special thanks to our Sanjeev ji and the Vishal bhai, who is managing the platform of AASB to arrange the VCM on, almost on all the standards. I think recently we have completed the 700 series. So now we are on the last part of the standards on auditing, the 800 series. So without taking much time, I'll start with my presentation. Okay. Is it visible, Anil?
Yes, sir. Yes, sir. Yes.
Okay. So good afternoon, friends. Thanks for joining us for the special series of 800, where we have to discuss about the special considerations required to be, adhered to and implemented to for the auditing in the special purpose framework environment. And as the topic suggests, if we see that this series, the standards on auditing series for 800, this is special in nature. Why? Because this require additional consideration to be implemented when conducting the audit in case of complete set of financial statements prepared from special purpose framework perspective, or we are doing the audit of a particular financial statement, for example, the cash flow statement, or we are doing the audit of a particular financial line item or the element, for example, audit of inventory, audit of revenue. So whatever standards we used to apply in the general purpose financial framework, say the audit of a complete set of financial statements prepared as per the Schedule 3 of the Companies Act 2013. For that matter, we have to apply 100 till 700 series. 100 is basically the introductory matter. Practically, we apply 200 series till 700. But when we say that, yes, we have to do the audit of special purpose framework based financial statements, in that scenario, we have to do additional procedures apart from the procedure defined till 100 till 700, which is specifically given in SA 800, SA 805, and 810. So we will understand what kind of requirement is given in these standards in the subsequent slide. So friends, I crafted this PPT in a practical way because these standards are practical in nature. So it's not like something we have to understand on the theoretical part only. Apart from theory, we have to understand the practical aspects where we face the challenges. So first we understand the key fundamental on a broad level when we do the audit procedures, right? Then we will understand what is the structure of standard issued by the ICAI, the AASB under the authority of council issued the standards time to time. So we understand, how these standards are structured. Standards mean the standards, including standards on auditing. I'm not saying standards on auditing. So on broad level, we will understand how these standards are structured, because all these standards issued by the ICAI, the AASB, of ICAI issued the standard. So those are part of SQC, right? Standard on quality control. SQC 1 require some prerequisite from the auditor that these are minimum things which you have to comply with. Then we will understand how standards on auditing are bifurcated, like which standards needs to be used when we are doing the audit based on general purpose framework, and which standards we have to use for special purpose framework. Then we will have a overview of 800, 805, and 810. And if time permits, we will understand the practical case studies related to these standards. Okay. So the key fundamentals basically here. So first question in our mind comes like, why specific SA 800, 805, or 810? If we do have the 100 till 700 series for the auditing in the general purpose framework. So friends, this is very much necessary because the standards from 100 till 700 series guide us to carry out the audit in a normal environment, like if we are doing the audit as per the Companies Act 2013, right? When we are doing audit in case of a special purpose framework environment, in that scenario, we have to consider the special pointers given by the SA 800, 805, and 810 based on the engagement we are in, right? And the next question is, should we apply this standard compulsorily, or will restrict us till SA 700 only? So answer is yes, we have to comply these standards compulsorily in case of financial statements prepared based on special purpose framework, or the engagement which are covered based on a special purpose framework or covered under the series of 800. So do we need to apply SA 100 till 700 series also if apply SA 800 series? So here basically the question is, should we focus on 800 series only, or can we or we need to focus on the complete set of standards on auditing, including 800 series? So answer is yes, we have to comply the complete set of audit standards on auditing in addition to 800 series, because 800 series gives the additional considerations to be comply with, in addition to the requirement of standards on auditing given in SA 100 till 700, right? Then next questions come in our mind. How does SA 800, 805, 810 help auditor? So basically, if you see the crux of the standard, which we're gonna discuss in the subsequent slides. So this series really helped auditor in a way, like if you are doing audit for a special purpose framework, for example, you are doing audit for a US GAAP, though the company is based in India and they are need to apply the framework based on Indian regulations, like they are supposed to comply as per Indian GAAP. So in that scenario, if you are doing the audit for US GAAP for that particular entity, in that case, you need to give disclosure in the audit report, you need to give a disclosure of framework in the financial statements, and you need to mention in the audit report itself that these financials are not meant for the general purpose. These are for the intended users only. These cannot be construed like the general purpose financial statements. So this should not be distributed to public at large, right? So these kind of considerations really help to the auditors to save themselves. If we are not complying this may be, I mean, these financials may be misused, or I mean, you may ultimately leads to the non-compliance of standards on auditing that. Is there is a specific format of reporting, though there is illustrative formats of audit reports given in the SA 800, 805, and 810. You can refer that. And for forming an opinion, you need to take the help of SA 700 also while drafting the or 800 series also. Who is responsible to make financials for specialized areas? Of course, this is audit. This is not something like we are doing on behalf of the management. This is not management consultancy or management related work. In that scenario, the financial preparation responsibility based on special purpose framework is still lies with the management only. It's not something like auditor will do or will compile the financial statements also and do the audit. It's not possible, right? So independence should be maintained. So when we say the independence as per SA 200, we need to check whether the ethical requirement, independence are there or not. Are we independent enough to accept that engagement? Is our team or the engagement partners or the staff of the firm are independent? That we need to check as per SA 200. Risk assessment procedures wrap at planning stage, yes, as per SA 315, 330, identification of risk and response to the audit risk, and SA 320, the materiality computation for at planning stage is required as per these standards, 300 series, because as I mentioned, the 100 to 700 series did to apply to 800 series related engagements. Misstatement, we have to evaluate while doing the audit of these engagements, that if we find the misstatement, whether that misstatement is error or it's deliberate or a fraud, right? So for that matter, we have to give due weightage to the standards on auditing related to fraud and carry out the specific procedure defined there. So these are few questions that we feel that yes, we should first understand, then we'll go for the detailed presentation. Subsequent points are the behavior, like the professional skepticism, like we do the audit in a normal environment, like the general purpose framework. for the special purpose framework based audits, we have to behave in a way like we should ask the questions from the management, that the line item or the financial statement based on the particular framework, like the US GAAP, UK GAAP, Singapore GAAP. I mean the special purpose framework, you should ask query from the management. It's not something like you already sometimes there are situations like you are the auditor in the for the general purpose financial statements, and you are also appointed for the special purpose financial statements. So in that scenario, you should not be like the entity and you just obtain the document the time of audit of a general purpose financial statements, and client asks you to carry out the audit of a cash flow statement or audit of inventory, and you said like already I obtained the document from the client at the time of general purpose financial statements, I'll simply just refer the document and conclude. So friends, this is very important, because you have to substantiate that based on the engagement letter you accepted that you will do that particular audit in the environment of a special purpose framework. And if you are not having the sufficient and appropriate audit evidence to convince to the reviewer or to the regulator that yes, you have performed the audit procedures, in that scenario, that situation would be very difficult for you. Next is the critical observations in reviews. So basically, this is based on my experience, what we observe that since these standards talks about the special consideration in 3 stages: this consideration at the time of engagement acceptance, consideration regarding the planning and performance of the audit, execution of the audit, and third is forming of an opinion, right? So what happened? We start the audit and fail to frame the engagement letter in lines with the SA800 series, right? The special considerations weightage we haven't given in the engagement letter. So that means that EL is not in lines with the SA800. And regarding the procedures, so the procedures defined in the SA800 regarding the special consideration not been duly considered while doing the special purpose framework. And regarding the form of opinion, sometimes we though we observe that the auditor give the para regarding the restriction of use or distribution of use to alert the auditor that these are not the special purpose framework based financial, these are not the general purpose based financial statements. But what we observe that the language given in that para was not appropriate. So the description given in the financial statement regarding the special purpose framework was not appropriate, right? So these kind of observations was we observed, right? And as we say that special purpose framework, so sometimes there are situations that we have to carry out the audit of a financial statement which have the special consideration. For example, we are doing audit as per US GAAP, and the team you have deputed do not have the knowledge of US GAAP. They are well versed with the Indian GAAP, but they are not having the expertise or US GAAP standards and the requirement. So in that case, we should have the team who have the knowledge and experience regarding that special framework. And last but not the least, this documentation, this audit documentation, my friends, is like if you did the audit and you failed to document that procedures, you have done on that particular engagement, it means that you haven't done anything, right? So we have to document the procedures we have done. And in documentation, we face on a broad level 2 types of scenarios. First is either we have very dicey documentation in the audit file, very few documents are available in the file, and few checklists were there and simply right tick and signed off. There was no basis of that right or wrong tick in the checklist, applicability or non-applicability of that particular answer to that question in the checklist, right? And the second scenario was there were lots of documents available in the file, right? But there was no audit procedures done on that particular document. Unattended document was there in the file. So, friends, there should not be over audit, there should not be under audit. Similarly, there should be a proper document available in the file which substantiate that what kind of audit process you have done. If whatever document you have placed in the audit file, your document should speak. Your file should be self, and that work paper should explain that why you have obtained that document, the purpose, the source of that document, the extent, the nature and timing. I mean, these parameters should be in what you are giving in the audit report. Okay. So, friends, these standards issued by the ICI are basically part of standard on quality control (SQC), which are divided in two parts: assurance related services and other related services. Assurance related services basically further divided broadly in two parts. So standards. So here I'm saying standards. I'm not saying standards on auditing. I'm talking about the broad, the structure of standards issued by the ICI. So audit and reviews of historical financial information. So this contains standards on auditing 100 till 800 series. So we are covering today 800 series because 100 till 700 already done. Standard on review engagements 2000 till 2000 series. Part B of this assurance services related standards includes assurance engagement other than historical financial statement, other than audit or reviews of historical financial statement, which is governed by 300 series. And there are standards which are not related to the assurance, which basically give guidance through 4000 series. So this is the broad structure of the standard. So today we are going to talk about the standards on auditing 800 series. Okay. As I mentioned in the previous slide, all the standards are part of SQC 1, right? So regarding the standards on auditing, there are some prerequisite from the auditor side that auditor should be independent enough to before accepting the engagement. You should obtain the confirmation from the all the partners of the firm, including engagement partner and the staff of the firm and the team who is going to be planned on that particular assignment. And the team or the engagement partner or the engagement team who is planning, who is planned for that particular engagement should have the adequate and updated knowledge. For example, the assignment where you are going to do the audit is supposed to be reviewed in lines with the IFRS or Ind AS, correct? And your team, though updated with the Ind AS, but there are amendments in that Ind AS or the accounting standard. So those updated knowledge should be there with the team, or especially in case when we do the audit of a banks. So RBI issued the master circulars or the circulars time to time. So if team is not updated with the changes, so that's gonna be a problem. And we should the firm, the audit firm should focus on the training and the skilling of the staff, and the staff you are deputing should be trained and the skilled, right? Understanding of the industry, this is very much critical. I mean, these days lots of innovation is happening. There are companies, ad tech companies, food tech companies, fintech companies. So how to do the audit in these environment? So for that purpose, we should understand the entity environment, the process level controls, entity level controls, and how the entity functions, right? And the next requirement of SQC is the understanding of relevant and applicable regulatory requirements. For example, if you are doing the audit of a bank, then you in case of insurance, IRDAI, in case of aviation, the AAI or the Aero, or in case of oil and gas, PNGRBC, and so on and so forth. So we have to keep ourselves in. And issued very beautiful document on standards on auditing, a checklist. If you have a time, please read that document. You will have a very crisp and clear understanding about standard. Okay. Anilji, can you confirm, am I too fast, or speed is fine?
Yes, sir.
Speed is okay, or
No, it is fine, sir. It is fine, sir. Perfectly fine.
Okay.
Fine, sir. Fine.
Thank you. So, application of standards on auditing. So we understand how, I mean, the structure of standards are defined, right? Now we'll understand the structure or the application of standards on auditing specific. So standards on auditing are basically divided in two parts: the standards on auditing for general purpose framework and the standards on auditing for special purpose framework. Today we are going to cover this part, but we have to apply the standard in sync with the 100 till 700 series, not in isolation with 800 series only, because this 800 series is the additional requirement by the auditor to comply with. It's not something like we should have the understanding on 800 series only, and we should have done the procedure based on 800 series only. It's not like that. We have to the procedures defined in SA 100 till 700 series in addition to SA 800. Correct? Let's understand what is general purpose framework. So general purpose framework designed to meet the common financial information needs of wide range of users, like we do the audit as per the Companies Act 2013. And it can be a fair presentation or the compliance framework. Now for the special purpose framework, this is designed to meet the financial information needs of the specific users, right? When we say the specific users, this SA 800 come into play. So as I mentioned, though this is very exhaustive checklist, you might have the idea of this already, but I thought that I should share this thing with you. That though there are things that we have to consider while doing the audit of general purpose framework, but when we are doing audit based on 800 series, the specialized areas, in that scenario, we have to apply the requirement of 100 to 700 series. Just to give you an example, for example, SA 200. If we are doing audit of specialized areas, SA 800, we have to apply SA 200 also, that whether auditor is independent and whether he meets the ethical requirement, and we should comply the terms of audit engagement defined in SA 210 in addition to the consideration given in the 800 series. Similarly, the audit documentation part, so this will be applied as it is to 800 series also. I'm giving you the idea because many a times we will discuss in the subsequent slide that SA 100 till 700 series will apply as it is to 800 series related engagements also. So first we need to understand how they will be applied, right? So I'm giving you the touch base that I mean where we can use, I mean how we can use. So generally the standards applies when these are conditional, like if that condition exists, then we should apply, right? And regarding if you find the misstatement which is due to fraud, then this as a 240 will come into play, and for the laws and regulations as a 250 will be used. And regarding the communication with those charged with governance, as a 260 will come into play. Generally, as per the standards on auditing as 800 series, it's mentioned that the TCWG, those charged with governance, generally are not supposed to oversight the status of or the observations of special purpose based financial statement, because generally they are of management use. So if you are not supposed to communicate with the TCWG, in that case, SA 260 might not be applicable. But if you are supposed to, then you have to communicate with those charged with governance. And SA 299, joint auditor. But in special purpose framework, frankly speaking, generally joint audits are not conducted, right? But if that's the case, then you need to apply this also. And for the planning and performing of the audit, so for the planning, we have to consider SA 300 and 315 and 320 for the materiality in planning and performance and audit. There might be a scenario that your your client tell you that the user of that special purpose financial statements clearly mentioned that if any error found below that particular limit, for example, the error limit, the ignorance of error limit from the management side is 2 crores. Like if any error found in the audit, see 2 crore as materiality. So the point here is we should apply the materiality which is defined in SA 320 guidelines, right? Basically, the procedures defined in SA 320, we have to compute the materiality based on 320 and apply. In our case, the 1 crore rupees in our example. SA 320, we will apply when we have to assess the risk response to the assess risk. SA 402, this applies when you are doing the, for example, you are doing the audit of an inventory, and that inventory is managed by the third party or another CA firm, right? So for that matter, you have to give due consideration for this service organization standard and evaluate the misstatement during audit as per SA 450. So this is regarding the basically the general principles and the Type 60 subsequent events, though there are special consideration given in the SA 800 series for particular engagement. But if you have to consider this, you have to read this standard, and if there are scenario, then how to report the going to 210.
Yes, sir. Uh, शायद ड्यू टू द टेक्निकल रीजन शायद सर स्विच ऑफ कर गए. मैं चेक करता हूँ. मैं चेक करता हूँ. Due to the technical issues, speaker sir has disconnected. He is rejoining. Apologies, members. Apologies for the inconvenience. Sometimes due to the network, it's got automatically disconnected. I've called him. He's trying to reconnect once again. Members, apologies once again. There is some problem in Zoom. So, speaker sir is connecting within next couple of seconds, within a minute, he will join. He's trying to remove this problem. We are trying to overcome with this problem. Sorry once again for the inconvenience.
Hello.
Yes, sir. You joined, sir? Yes.
Yeah.
Yes.
Extremely sorry. Actually, there was technical glitch my end. So just give me time.
Yes.
So where were we? Arilji, can you confirm which slide? So we were here only, right? Okay. So friends, extremely sorry for the last minute glitch. Anyway, so we were discussing like the SA 100 till 700 series equally applies to the engagement which we are supposed to carry out for spatial framework, the 800 related engagements, 800 series related engagements. So these the independence of auditor and SA 210 regarding the terms of audit engagement and the audit documentation, and similarly the risk assessment procedures we have to carry out, and the complete planning like the SA 300 for the planning, SA 315, 330 for the risk assessment, and 320 regarding the materiality in case materiality is lower as per SA 320 and client giving you the threshold that below that is not material for them. For example, as per SA 320, materiality comes to 1 crore and client is saying for them materiality is 2 crore. So you have to ignore, disregard their materiality. You have to consider your materiality, SA 320, correct? So these standards like SA 500, SA 530, audit sampling, related parties, just I'll put the ledger. Yeah. So the SA 550 related parties, if that component have the related parties and SA 570 going concern, SA 580 return represent is equally applicable. We have to obtain the MRL as well. And these standards will so like the SA 600 because as I mentioned, the standard will apply if that condition exists. For example, if there is no joint audit, so SA 299 will not be applied. If there is no internal audit applicable, so for the special purpose framework, then there is no applicability of SA required, right? And similarly, if you are not using the work of an audit expert, SA 620 may not be applicable. But in that scenario, if you are confirming that particular standard is applicable and another is not applicable, so you should have the basis for the non-applicability of standard as well as the standard which are applicable. So for applicable, it's easy that you will substantiate from the audit procedures. But for the standard which are not applicable, so you should have the document in the file that why this standard is not applicable, why that particular condition not exist. Correct. Okay, so that was the complete overall theme that I thought I need to discuss with you. Now let's have a overview of SA 800 for which we are here. So Anilji, can you confirm it's visible now? Is there any?
Yes, sir.
Okay, perfect. So friends, as I mentioned, we have discussed the foundation of audit, the fundamentals and the basic points related to the 800 series. Now we'll deep dive and understand what kind of special considerations or the additional points we have to carry out in addition to the other audit procedures defined in SA 100 till 700 series. So SA 800 talks about audit of financial statements prepared in accordance with special purpose framework. So what is special purpose framework? Let's understand. As per standard, special purpose financial statement prepared in accordance with special purpose framework. It may be the only financial statement that entity prepares. Financial statement may be used by users other than those designated under special purpose financial reporting framework. So what it means, let's read next line also. Even then, financial statements are considered to be prepared under special purpose financial reporting framework. So here standard wants to convey that the special purpose financial statements, first of all, means that the financial statement prepared as per a special purpose framework. In our case, this might be the financial statement as per US GAAP. For example, if you are having a major investor based out of US or the UK, and that investor asks your a client where you are supposed to do the audit of special purpose framework, that you kindly provide us the financials based on US GAAP, and that should be in US dollar, and because I'm not able to understand the INR impact and all, so the performance of your entity I need in US GAAP, and that should be audited by the auditor. So for that matter, the special purpose framework for your engagement would be US GAAP, right? And there might be a scenario that entity where you are doing the audit is not subject to audit, right? So the special purpose audit report issued by you as per SA 800 might be the only financial statements related audit and the audited financial statements available with that entity. So maybe that financial statement distributed, but even if that distributed, though that's not supposed to be distributed, but even if that distributed, still that will be considered a special purpose financial reporting framework. That cannot change the color, right? That will not become the special purpose framework, general purpose framework financials. Now let's understand what is special purpose framework. So a standard says financial reporting framework designed to meet financial information need of specific users, right? It's not for the general public. Compliance, this might be compliance or the fair presentation framework like the IFRS or the Ind AS. Special purpose financial reporting framework based on general purpose financial reporting framework, but not complying with all its requirement cannot be described as general purpose. For example, you prepared the financial statement, you have to comply with the Ind AS, You prepare the financial statement as per Ind AS, but you are not giving the additional disclosure because those might not be relevant for your user. So you are not giving that disclosure, which is required as per Ind AS extended disclosures, or you are not giving the Schedule 3 disclosures. So in that scenario, that these financials may not be considered, cannot be considered as special purpose financial statement, right? And prepared based on special purpose financial reporting framework. Of course, related notes ordinarily comprise of significant a summary of significant accounting policies and other explanatory information, because SA 800 says that here we are talking about the complete set of financial statement as per SA 800, right? It's not like something we are just talking on particular financial line item audit. So that will be covered in the subsequent standard, SA 805. Here, SA 800 covers the complete set of financial statement as per special purpose framework, right? So here, accordingly, the summary of significant accounting policies and other explanatory notes is required to be given. Applicable financial reporting framework determines the form and content of financial statement. As per US GAAP, there's a presentation format, so you have to follow that format only, right? And what constitutes a complete set of financial statements? So next question comes, sir, if we are doing the audit for the purpose of income tax or the tax audit purpose, because if your client is following the calendar year as the year for the general purpose financial statement, December ended financials are used for the ROC filing and prepared as per the Companies Act 2013, then of course, if you have to do the tax audit, then for the tax audit purpose, you have to follow the financial year from April to March. For April to March, you have to again, do the audit for the financial statement prepared for tax audit purpose. So the question is whether these financials, which is prepared for tax audit purpose or the income tax purpose, will be considered as a special purpose financial statement. So the answer is no. These will be considered as general purpose based financial statement, specifically mentioned in the standard SA 800. Therefore, we have to comply with all the standards related to these standards, and there won't be any restriction to use that. Scope. What the standard? What the coverage of this standard? So SA addresses unique consideration in audit of financial statement prepared under a special purpose framework. We are talking special purpose framework only. It applies to full set of financial statement. As I mentioned, this is not talking about the audit of particular line item, audit of inventory or the revenue. No, this is talking about the complete set of financial statement, while SA 805 covers specific elements. It does not override other SAs and may not cover all relevant considerations in audit. For example, your client is saying you have to do the audit as per US GAAP or the IFRS, but my materiality for that audit is 10 crores rupees, right? But since you have to comply with the SA 320, and if SA 320 says that if you do the computation and as per SA 320 working, the materiality comes to 5 crore, then you cannot override that 5 crores limit. You have to comply 5 crore materiality during the course of audit of a special purpose framework based audit. It's tailored for special purpose framework audits and may not encompass all audit requirements, right? Objective. What this standard wants from auditor. So these objectives, basically in all these three standards, are divided in three parts. There are special considerations for engagement acceptance. Some points, additional points needs to be taken care by the auditor apart from things which are mentioned in SA 210. There are considerations which needs to be taken care as per SA 800 regarding planning and performance of engagement of special purpose based financial statements. And these would be in addition to the planning and procedures we have to carry out as per SA 300 series 315, 330, correct? So additional considerations we have to give in. And regarding the form, opinion, and reporting, though we have to comply SA 700 altogether while forming an opinion, but there are few considerations which we have to give when we are doing the special purpose audits, correct? let's understand what are the considerations we have to give when we are accepting the engagement. We have to understand what is the purpose for which the financial statements are prepared before accepting the engagement. These are the conditions we have to check. What are the who are the intended users to whom these financials are prepared? Steps taken by the management to determine that applicable financial reporting framework is acceptable. So you have to understand what steps taken by the management. For example, their intended user are based out of US, and management ask you to carry out the audit of a financial statement which they have prepared based on Singapore GAAP. I'm giving you an example, hypothetical example. So you have to understand, how that Singapore GAAP is having the acceptability for the intended user, because the applicability of special purpose financial framework primarily designed or applicable based on the usage by the intended user, right? So in that scenario, we have to understand how the management identify that the applicable financial reporting framework is acceptable. Regarding the acceptability of financial reporting framework, there might be three situations. One is that applicable financial reporting framework laid down by the regulator or the authority. That authority asks companies to carry out the special purpose audit in particular framework. Or in case there is a conflict between financial reporting standards and additional requirement as per financial reporting framework, then you have to follow again the terms of audit engagement, SA 210. And in case financial reporting standards prescribed by laws and regulations is unacceptable, in case there is a situation of unacceptability, then we have to understand, how management has considered the same while accepting the audit engagement. So generally, in case of a special purpose financial statement, the financial information needs of the intended users are a key factor in determining the acceptability of the financial reporting framework applied in the preparation of the financial statement, right? In case of conflict, of course, as I mentioned earlier, SA 210 needs to be complied with. Now, we'll understand the special considerations required by SA 800 while planning and performing the audit. Whether so we have to obtain an understanding of whether SA is relevant to the audit have been complied with. If this is a situation like the essays, the requirement of SA are not met with, auditor cannot state that special purpose financial statements comply with these standards on auditing. There is this exception if the requirement of standards on auditing is conditional and such conditions do not exist. For example, you have to apply the standards relating to the use of work of an audit expert. If you're not using the audit expert, then that condition do not exist. In that scenario, you don't need to apply that standard, the use of auditor's expert. Similarly, if for example, as per SA 260, you have to communicate with those charged with governance for the audit conducted by the auditor. But for the special purpose framework, if there is no condition that you have to communicate with those charged with governance, you have to communicate with the management only. In that scenario, you don't need to comply with SA 260. So this is probably based on the condition. Second, we have to obtain an understanding that determine whether the application of standards on auditing require special considerations in circumstances of the engagement. What are the considerations? Whether purpose for which the special purpose financial statement is prepared, we have to understand that, and the intended user of the special purpose, right? So these are the considerations which we have to consider. The next is the body of the opinion to be framed for SA 800 related engagement. So the first consideration is whether the report and the financial statement describe the applicable financial reporting framework. So, the financial statement which you are going to do the audit should clearly state that which are the financial reporting framework, right? Purpose for which the special purpose financial statements are prepared should be clearly mentioned in the audit report. And who is the intended user for which these financial statements are prepared needs to be given in the audit report by way of a para, right? And management responsibilities regarding the acceptability of financial reporting framework and the preparation of special purpose financial statements needs to be clearly mentioned in the audit report, like we mentioned in the general purpose phase financial statements audit. And the auditor's responsibility regarding the audit of financial statements based on the special purpose framework should be clearly mentioned. And the restriction to use. So S800 requires to give the para in the financial statement that you should mention that in the audit report that that the financial statements which are attached to the audit report are for the intended users only, not for the general public. So basically, EOM para can be given that these financial statements are prepared based on the special purpose financial framework. These are not the general purpose based financial statements. Similarly, for to restrict the usage, you can mention that these financial statements are for the specific user. For example, if the financial statements are prepared based on the requirement of the contract, then you should mention that this is the requirement of that particular entity, and these financial statements are for that entity only. Or that might be requirement of the loan agreement, or by the if that's the requirement of law or the regulation, that you need to refer that law and regulations in the para that this is for that use only, not for the general public. So this was about this was all about SA 800, friends. Now let's have a understanding about SA 805. So 805 talks about the audit of a single financial statements and specific elements, accounts, or item of a financial statement. This not talk about the complete set of financial statement. While SA 800 talk about the audit of a complete set of financial statement, which we called a special purpose financial statement, prepared based on a special purpose framework, which can be the requirement of the contract or the investor, or if not defined, then the company can define based on the requirement of the intended user, and there might be requirement of the laws and regulations also, right? So let's understand the definition. As per SA 805, element of financial statement or element means element, account, or item of a financial statement. For example, let's understand from subsequent definition. So financial reporting standard, the accounting financial reporting standards, basically the accounting standard issued by the ICAI, or the accounting standard for local bodies if your client is local bodies, or accounting standard notified under the Companies Act. Here accounting standard includes the Ind AS as well, or the IFRS issued by IASB, or any other accounting standard as may be applicable to the entity for that particular engagement, right? Because here we are talking about the special purpose financial statement or the financial statement, or particular financial line item, right? Similarly, we have to understand what is single financial statement. A single financial statement is, for example, a cash flow statement. Management asks you to carry out the audit of a cash flow statement, or to a specific element. For example, they ask you to carry out the audit of a cash and bank balances, audit of an inventory, audit of a revenue, receivables, doubtful provision for doubtful debts, and they may ask you to audit the grant. So for that matter, the single financial statement or the specific element of financial statement includes the related notes. So explanatory notes required to be included. The related notes ordinarily, what is related notes? The related note ordinarily comprise a summary of significant accounting policies and other explanatory information relevant to financial statement or the element. Correct? Okay. So SA 805, let's understand what is the coverage of this SA. As we mentioned, SA 100 till 700 still applies to the complete series of 800, right? deals with the audit of single financial statement or the specific element, not for the complete set of financial statement. It does not apply to the component auditor. Like when we do the audit on behalf of, for example, your audit of a subsidiary of particular group, and the group auditor of that parent company basically ask you to provide the audit report and do the specific procedures based on the group audit instructions. So that report or the procedures done by the auditor is not covered, though it might be it might supposed to, but this is specifically excluded from this. And this do not override requirements of other essays, as I mentioned, like essay 260, materiality concept, and the risk assessment procedures we have to carry out still. Deal with special does not deal with special considerations that may be relevant in circumstances of the engagement. For example, materiality given by your client for that particular engagement, the specific engagement is higher, and as per SA 320, materiality is lower. So you can't consider higher materiality. You have to consider the materiality computed as per SA 320. Okay, objective. What this standard wants from us, again, as I mentioned, these considerations divided in 3 parts. Some considerations as per at the stage of engagement acceptance. There are considerations to be complied as at planning and performance stage, and some at the time of forming an opinion. Okay. So as I mentioned previously, the example of single financial statement or element of financial statements are account receivables, allowance for doubtful debts receivable, inventory audit, liability for accrued benefits of a pension plan, and a schedule for externally managed assets and income of a private pension plan, including related notes, schedule of net intangible assets, including related notes. Can you see that everywhere the notes are included? So this is compulsory if you are doing audit of any of a single financial statement or element of financial statement. So explanatory notes is required to be given with that statement, and that's the bare minimum requirement as per SA 805. Okay. So as we discussed previously, these are 3 stages where the considerations specifically given for 805, in addition to the say 100 till 700 series. So we have to obtain understanding whether application of standards on auditing, complied or not. So this would be discussed at the engagement level only. You have to ensure that if you accept that engagement, whether standards on auditing will be applied or it's practical to apply. And second, the financial reporting framework are acceptable or not, or the form of opinion. What would be the form of opinion will be decided the engagement acceptance before engagement acceptance only, right? Application of essay. So we will discuss these 3 in detail in subsequent slide. So application of essay is basically whether independence requirement are complied with, like essay 21, essay 200, and essay 210, and the other requirements. Whether the auditor is engaged to audit the complete set of financial statement or only appointed for the audit of a single financial statement or the element of financial statement. So friend, this is very, very critical, because it's very easy for the auditor who is doing the complete set of audit for general purpose based financial statements to carry out the audit of a particular financial line item or the element or the single financial statement, because that auditor has the complete idea about the entity environment, working style, and the documents you have obtained, and the detailed understanding about that particular captions or the domain which they are supposed to do as per SA 805. For example, you are the auditor of A Limited, and you are already doing the audit of financial statement as per Companies Act 2013, and client asks you to carry out the audit of inventory for some particular intended user or audit of account receivables. So in that scenario, for you, this would be very smooth to carry out the audit, because you know the client, you know the industry, you know how the clients works, and you have the understanding on the you have the complete grip on the client, and you have the detailed information available with you. While if that person who is not the auditor of that entity and appointed for a special purpose audit or special audit as per SA 805 for audit of inventory, so that might be challenging for him to see whether he should accept the audit of that particular financial line item or not. For example, if he doing the audit of if he is not the auditor and he's supposed to do the audit of receivable, so for audit of receivable, there are interlink of other component of financial statements, right? So, for example, for audit receivable, you have to check the position of a collection in bank. You have to check the aging. You have to check how they are recognizing the revenue. You have to check how they are recognizing the provision for doubtful debts. You have to check how they are having the control over the customer, how they are monitoring the receivables. I mean, there are other aspects also. I mean, there are other component also. I mean, how they are corroborating with the financial line item for which you are engaged to carry out the audit. It's not something like you can't do, but because if you do the audit of particular financial line item, I mean, please understand, you will have very limited access to the information, right? Limited in visibility about the client, right? And limited time you will be given to carry out that audit. So in that scenario, sometimes it's might be impracticable to do the audit. But practically speaking, generally the auditor of general purpose financial statements carry out these kind of audit. Generally, I mean, I'm not saying it's universal. It's generally. Regarding the acceptability of financial reporting framework, the considerations is whether any restrictions imposed by the standard setting organization to comment on that particular financial line item or the financial reporting framework accepted by the entity, whether application of financial reporting will result in presentation that provides adequate disclosure to enable intended users to understand information conveyed in SFS. So you need to understand at engagement acceptance level only whether the financial reporting framework which client is proposing you for the audit is giving the adequate disclosures that the user can get the detailed idea about the informations you want to convey, and effect of material transactions and events on information conveyed in a single financial statement or the element of financial statements. Form of opinion. So at engagement acceptance only, you have to understand what be the form and content of opinion, and what the framework, whether framework is fair presentation framework or the compliance framework, or what terminology you're going to use present fairly in all material aspects or true and fair use. So these are the judgment, I mean, completely based on the judgment of the auditor, you have to evaluate. So we understood the considerations at engagement acceptance level. Now let's understand the considerations required at planning and performing an audit level. So we have to obtain understanding of whether essays are relevant to the audit have been complied with. If yes, and we have to see careful consideration of relevance of each essay is necessary. So we have to see whether all the applicable standard from 100 till 800 series are checked and applied with. Audit evidence obtained as a part of audit of complete financial statements. So there might be a scenario that you obtained the you are the auditor of that entity and you are doing the audit of a special financial line item also. So in that scenario, if audit evidence obtained as a part of audit of complete financial statement may be useful, but auditor to plan and perform of audit of a single financial statement to obtain sufficient and appropriate audit evidence, because this engagement is separate, right? You have to carry out the audit procedures again and then issue the opinion. It's not something like you already issued the opinion on general purpose financial statement and you don't need to carry out the procedures, right? Because you have the idea. It's not like that. You have to substantiate that, yes, you have obtained the sufficient and appropriate audit evidence and then concluded on the audit opinion. Interrelated items in audit of element of financial statement, as I discussed in the previous slide, auditor would need to perform audit procedures on such interrelated items as well. For example, if you're doing the audit of receivables, then you may need to carry out the audit of revenue also. You need to carry out the bank scrutiny also. You need to check the aging part also. You might be linking from the inventory part also. What's the impact of sale, whether the inventory whether the account receivables having the impact of genuine transactions or not, right? And similarly, for the materiality of single financial statement is less than materiality of complete financial statement. Yes, because the complete financial statement is considering the size, the materiality would be at higher side. But for the single financial statement, for example, cash flow, the materiality might be lower. For example, for the complete set, materiality is 10 crore, but for the cash flow, it might be 2 crores. So in that scenario, you have to evaluate the nature, timing, and extent of audit procedures to be applied for evaluation of uncorrected misstatement. But as I mentioned earlier, you have to give weightage to the materiality computed as per SA 805 in line with SA 320, right? You can't consider the materiality derived based on the complete set of financial statement, because you are not the auditor of that complete set of financial statement. You are doing the audit of particular component only. So if you're doing the audit of particular component only, so the materiality derived based on that component only, right? Not from the complete set of financial statement, even if you are the auditor of that complete set of financial statement, correct? And of course, you have to obtain the MRL and do carry out the impact of risk of material business statement as per the SA 300 series, and obtain the written representations from the client. Last stage for the considerations is forming of opinion and reporting considerations. So consider following while framing an opinion in addition to SA 700 requirement revise. First consideration is if auditor appointed for both, you are auditor of general purpose financial statement as per Company Act 2013, for example, as well as you are auditor of single financial statement, for example, cash flow statement. You have to issue separate report for each. As I mentioned, these both are the separate engagement. Entity publishes single financial statement along with the complete financial statement. So differentiation should be made between both. If it is not met with then management to rectify the same. So both the financial statement, the single financial statement should be clearly mentioned that this is for the special purpose, not for the general purpose, and this is for the intended user only. And differentiation in opinion issued. Opinion should be clearly mentioned that this is for the special purpose. Do not use the audit report on single financial statement until satisfied with the differentiation. If management do not do the changes, don't issue the audit report, because otherwise this may mislead to the user. Qualified opinion, EOM or other matter para in complete financial statement. Complete financial statement means audited financial statement as per general purpose financial statement. So determine the effect on single financial statement. If necessary, modify the single financial statement and include the modified opinion in single financial statement or element of financial statement. For example, there is a qualification already given in the line item like inventory, right? And you are hired to carry out the audit of inventory as a special assignment, and you are doing audit as per SA 805. So for that matter, you have to see if there is a qualification on or EOM related to that that financial line item, that you then in that case you have to give and modify your opinion also. Adverse opinion or disclaimer of opinion. In case the audited financial statement or the complete financial statements already have the adverse opinion or the disclaimer of opinion, there is no opinion on the financial statement. In that case, standard says ideally you cannot issue unmodified opinion on single financial statement, since single financial statements form a major part of the complete financial statement. So So generally, it's a understanding that the single financial statement, for example, cash flow statement, if you are doing the audit of that statement, considered as a major part of the financial statement, right? So in that case, it's contradictory to issue unmodified opinion in such scenario, because if in another the complete set of financial statement, auditor is saying, I can't give the opinion, disclaimer of opinion is there, or the adverse opinion is given, in that case you can't give the unmodified opinion. Or second situation would be there is an adverse opinion, disclaimer of opinion on the complete financial statement, but unmodified opinion on your financial statement area, like you are doing the audit of a receivable. But this can be done only if there is no restriction as per law and regulations, and auditor report of element of financial statement should not be published with audit report on complete financial statement. So you have to ensure that your financial statement, your special purpose element, for example, audit of receivable statement, should along with your audit report should not be published with the complete set of financial statement. Otherwise, this may mislead, because in the complete set of financial statement, there is an adverse or disclaimer of opinion, and on the other hand, you are giving the unmodified opinion. So a specific element does not constitute a major portion of entities, and you have to check that that's not the major component. If that's a major component, then the first scenario will be triggered. You have to give the same opinion which is given in the financial statement based on general purpose. Okay, so these are the considerations which we have discussed on SA 800 and 805. That 800 talks about the complete set of financial statements as per SA 800 for special purpose framework. SA 805 talks about the audit of single financial statement or the element of financial statement. Now 810 talks about to report on summary financial statement, summarized financial statement. How the summary is derived? Summary is derived from the audited financial statements, right? Let's understand what is audited financial statement and what is summary financial statement. Audited financial statement issued by the auditor in accordance with SAs and from which the summary financial statements are derived. For example, you are, audit of financial statements as per Companies Act in India is done, and summary financial is basically summary financial statement derived from that. So summary financial statement is nothing, just the extract of audited financial statement. Summary financial statement definition is historical financial information that is derived from financial statement, but that contains less detail. Of course, that's the summarized way of reporting. Then the financial statement. While because there might be a situation like company don't want to give the complete set of financial statement to the intended users, or might be there's a requirement from the law or regulation that you have to give the summarized way of financial figures also in addition to the audited financial statements. So in that scenario, there might not be the requirement to give the detailed disclosure of Ind AS or the Schedule 3, right? So therefore, they are giving the statement here that contains summarized financial statement contains less detail than the financial statements, while still providing a structured representation consistent with that provided by the financial statement of the economies, entities, economic resources or obligations at a point in time or changes therein for a period of time. Different jurisdictions may use different terminology to describe the historical financial information. Some may use the abridged financial statement wording, or some may use the other terminology, but terminology can be changed, but the theme or the procedures will remain same, right? Scope. Again, what this standard want from us. So this standard says basically coverage is deal with the auditor's responsibility, our responsibility, because we are discussing from the auditor's perspective, when undertaking engagement, accepting engagement to report on the summary financial statement derived from the financial statement audited in accordance with SA by the same auditor, right? Same auditor. Determine what we have to do then, because generally here the auditor of this summarized financial statement and auditor of the general purpose financial statements are same, because it's very easy for them to conclude. And practically speaking, the field work also parallelly altogether with the general purpose financial statement as well as special purpose financial statement. Right. So standard said we have to determine the appropriateness of acceptance of the engagement to report on summarized financial statement. Form opinion. So opinion on financial statements, we have to form opinion on a summarized financial statement based on evaluations of conclusions drawn from evidence obtained. Then standard says express opinion through written report that also describe the basis for that opinion. Right. So considerations, friends, as I mentioned, 3 stages. Considerations given: acceptance level, engagement acceptance level, planning and performance level, and the forming and opinion level. So acceptability of criteria. So we have to understand the criteria. What are the criteria applied? So let's read and understand. Aggregated nature of summarized financial statement (SFS), including limited disclosures. So there is a risk. So because summarized financial statements contain the limited disclosures, so there might be a scenario that the disclosures language might be diluted, right? And we have to understand what is the nature of entity, purpose of summarized financial statement, information needs of the intended user, what intended user wants from that summarized financial statement, whether applied criteria will be misleading. So that we have to evaluate. Standards laid down by the standard setting board or law or regulation. If there's a requirement by law or regulation, then we have to accept that as a applied criteria. If such criteria, if there is no any criteria, I mean, how the summarized financial statements to be prepared, then management may develop their own criteria based on the industry practice, right? But for that matter, we have to ensure that the summarized financial statement adequately disclose their summarized nature and identify the audited financial statement. Because without audited financial statement, because that's the summary of or the extract of audited financial statements only. So without audited financial statements, that would be very wrong way of presenting the financial statement if we are not giving the detailed financial statement to that. Otherwise, the user might not be able to understand the impact what is given in the detailed financial statement. Clearly describe from whom or where the audit financials are available. If the financial statements are not attached, then in the financial statement, so here we are discussing at engagement acceptance only. We are not doing the audit. We are just at engagement acceptance only. We are agreeing with the management that you will clearly describe that from whom or where the audited financials are available, will be available. Or if law regulations provide that audited financials need not be made available to the intended users of summary financial statements, then and establish the criteria for preparation of summarized financial statement. So there might be a situation. First situation, you have to attach. If you're not attaching, then mention like from whom or where you will get the audited financial statement. Like you can give the reference of company secretary, the compliance officer, or you can give the if you are the listed entity, you can give the reference of website, then you can download from the financials, or you can give the number or the contact details, like you can ask and call them and they will provide the financial statement. So whom or where the audited financials are available should be clearly described, and adequately disclose the applied criteria. I mean, how you have prepared the summarized financial statement. Agree with or can be recalculated. So these summarized financial statements can either tick and tie or can be recalculated from the related information in audited financial statements. In view of the purpose of summarized financial statements, contain the information necessary and are at an appropriate level of aggregation so as to not misleading in the circumstances. Correct. Management acknowledgement. In the engagement acceptance only, you are discussing with the management, you have to acknowledge these facts. So the consideration is for the preparation of summarized financial statements in the accordance with the applied criteria, management acknowledges its responsibility, and to make the audited financial statements available to the intended users of summarized financial statement without undue difficulty. You are discussing with the management before acceptance only, and this will be part of the engagement letter. Or if law or regulation provide that you don't need to provide the summary financial statement, then you have to disclose that fact in the financial statement. To include the auditor's report on summarized financial statements in any document that contains the summarized financial statement. So you ask management that if you are including my summarized financial statements, then you have to include my audit report also. It's not like you just include my summarized financial statement and remove my audit report. Right, there might be a situation like because I have to state clearly that these are the special purpose, not the general purpose financials. Applied criteria unacceptable. There might be a situation that the criteria is not acceptable, right? So auditors shall not accept the engagement unless required by law, and if required by an engagement conducted in accordance with such law or regulation does not comply with SA, there might be requirement. First of all, engagement applied criteria is not acceptable. Second, if law require and you concluded that do not comply with the SA, then you have to state in the audit report that SFS shall not indicate that the engagement was conducted in accordance with this SA. Include appropriate reference to this fact in terms of engagement. You have to clearly mention this fact that we are going to write this, and this would be the arrangement. Determine the effect that this may have on the engagement financial statement from which SFS are derived, because these are the extract of audited financial statement. Nature of procedures. So there are procedures defined in the SA 810 that SFS adequately summarized financial statement, adequately disclose the summarized nature, identify the audited financial statement. In the financial statements, should be clearly mentioned that where they will get the audited financial statement. If SFS is not accompanied by audited financial statement, then describe following: to whom or where audited financials are available. You have to write in the management needs to write in the financial statement, right? Like who will give, the compliance officer, secretarial, company secretary, or the you can get the financials from the website or the contact details, as I mentioned in the previous slide. Whether available on public reports, like in case of company listed on stock exchange, you can get from the website. Whether management has established process, but this fact should be mentioned in the financials that these are available in public reports, and how they can get that, the link of website. Whether management has established process where such users can get the access to the information, and the law regulation which specify that financial statements need not be made available, audited financial statements need not be available to intended users of summarized financial statements, then establish criteria for creation of SFS. In the financial statements, you should clearly mention that why these are not required as per particular law. Whether SFS adequately disclose the applied criteria, disclosure of applied criteria is required, and ensure that SFS are prepared based on the criteria only, and SFS contain necessary information which are appropriately aggregated, not to misleading to the user of the summarized financial statement. Whether audited financial statements are available to intended users without undue difficulty, right? And whether SFS with related information in audited financial statement is to determine if SFS agree with or can be recalculated, as we discussed in the previous slide. Form and audit opinion. So the form of audit opinion of summarized financial statement can be summarized financial statements are consistent in all material respects, or fair summary of audited financial statements in accordance with applied criteria. If law and regulations, friends, here this is interesting. If law and regulations prescribe different wordings, then we have to apply procedures describing in slides relating to previous, like the nature of procedures we mentioned. And evaluate whether user of summarized financial statement might misunderstand the auditor's opinion on. If law prescribe different wordings, and then you have to use those wording, and if as per auditor's understanding you are feel that auditors the user of that financial might mislead, in that scenario auditor conclude that auditor explanation would not mitigate the possible misunderstanding, then do not accept the engagement, and if unless required by law and regulations. and in case case required, still you have to report in the report audit report that the engagement conducted by you is not in lines with the essay. Timing is very critical. As I mentioned, practically the complete set of financial statement, the audited financial statement and the summarized financial statement field work run parallelly. But standard says the date of audit report on summarized financial statement shall not be earlier than the date of report on audited financial statement and date on which the auditor has obtained audit evidence for performing the audit procedures. Right? If audit report is signed on 5th of May, the summarized financial statement can be signed on 5th of May or later, but cannot be earlier than audited financial statement. Subsequent event. So this is very interesting consideration. Auditors report on SFS, summarized financial statement, to mention the fact that SFS do not reflect the effect of events that occurred subsequent to the date of auditor's report on the audited financial statement. So on SFS, you have to state the condition that you haven't checked anything beyond the auditor's report. Auditors need not perform additional procedures, and you are not supposed to carry out the subsequent audit procedures to obtain audit evidence from the events occurred after the date of auditor's report on audited financial statement. So any event after 5th of, for example, in 5th May, audited financial statement signed, and you carried out on, you issued your report on 10th of May, then in between 5 days, you don't need to carry out, but you have to disclose this fact that you haven't done anything for subsequent. Auditor may become aware. There might be a situation like the auditor of complete set of financial statements aware that there are subsequent event which may be or may not be subject to adjustment in the auditor's complete set of audited financial statement. In that scenario, the auditor of summarized financial statement, in our case, might be same only. Auditors shall not issue the auditor's report on summary financial statement unless the auditor's consideration of such facts in relation to audited financial statement in accordance with SA 560 has been completed. Right. So this is the element, like we have to give title, address, introductory, management, and auditor's responsibility para in the opinion, in the auditor's report, and opinion, auditor signature, date, place, and UDN, of course. Special consideration. So if regarding the audited financial statements contain the qualified opinion, EOM, or other matter, then in your summarized financial statement, you have to satisfy yourself that summarized financial statements are consistent in all material respects or are a fair summary of audited financial statement. Then you have to report also that the audited financial statements contain qualified opinion, UM, para, and describe the basis of that. In case adverse opinion or disclaimer of opinion is given on audited financial statement, so friends, you have to report that the statement on audited financial statement contain adverse opinion or disclaimer of opinion and provide the basis of opinion. Statement that in this scenario you can't express an opinion. I mean, you have to state that this financial statement giving the adverse opinion. So in that scenario, it's inappropriate to express an opinion on the SFS because that's the extract of audited financial statements only. Another scenario is unmodified opinion on audited financial statement, but might be situation like in summarized financial statement, management haven't done any change. So in that scenario, you can't comment that the figure summarized financial statements are consistent. So you have to state that summarized financial statements are not consistent in all material respects if management do not change to make changes. Restriction and on distribution or use of alert the user of summary financial statement has been prepared on the basis of special purpose framework. Like what is the purpose, intended user, and may not be suitable for any other purpose. So that you have to mention in the summarized financial statements related audit report. Comparatives. If audited financial statements contain the comparatives and summarized financial statements do not contain the comparatives, you have to determine the effect of unreasonable omission, right? And if summarized financial statement contain comparatives that were reported by the previous another auditor, and the auditor's main report, I mean, the audit of financial statement as per general purpose financial framework contains the para as per 710 that the previous number was audited by the another auditor. That para you need to repeat in your audit report also. In case unaudited supplementary information, friends, also contains with the summarized financial statement. In that case, you have to clearly mention with your audit report that these are not audited by you, and if management, and you should ask management that you clearly change the presentation of such unaudited supplementary information. If management won't do the change, then explain in auditor's report that unaudited supplementary financial information are not covered by your audit report. As I mentioned, and next point is the coverage. Like as I mentioned, like we have to apply 100 till 700 series. So other information is part of SA 720. We have to read and check the consistency of other information given along. So in that scenario, we have to read other informations to identify material consistencies vis-a-vis summarized financial statement. If there is material inconsistencies, then we have to determine summarized financial statement and other information needs revision. So we have to ask management to change. If auditors become aware that other information needs to be revised, then we have to discuss with the management. Auditor association. For example, if so I'll read it for you, then we'll discuss. If auditor become aware that entity plans to state that auditor has reported on summarized financial statement in document containing SFS, but does not plan to include the related auditor's report, the auditor shall request management to include the auditor's report in the document. If management does not do so, the auditor shall determine and carry out the other appropriate actions designed to prevent management from inappropriately associating the auditors with the SFS in their document. So here it says that if auditor got to know that fact that they are attaching the summarized financial statement in a particular document, but they are not including his special purpose audit report as per SA 810, right? So auditor can ask management that through, I mean, he can communicate with those charged with governance, or he can ask the regulators or the authorities that the financial statements contains the audit report also, but management fails to disclose that. So kindly associate my audit reports along with the statements, not only the summarized financial statement. Okay, Anilji, do we have 5 minutes?
Yes, sir. Yes, sir.
Okay, so I'll quickly cover these 5 to 6.
Please, kindly.
So friends, we have understood SA 800, 805, 810, right? So let's quickly recap by way of case studies. Okay. So this is very interesting. So CA Lalita is an auditor of a company. She is also offered professional work of audit of financial statement. She is the auditor of general purpose financial statement. She is appointed for a special purpose framework financial statement also. So she chooses to accept work and has made up her mind to disclose this fact in other matter paragraph in audit report to be issued by her for this specific engagement. In our case, SA 800 will apply. Is her approach proper? I mean, giving the other matter para in SA 800 related engagement report is proper. So in the given situation, the approach of CA Lalita is proper. There is no bar for accepting such an engagement, even though she is the auditor of a company. Besides, she has intended to disclose this fact in other matter paragraph of the audit report to be issued by her for such specific engagement. So she is right. She can disclose. CA Lakshmi, another case study, has prepared. CA Lakshmi has prepared a draft report for financial statement of X Limited, prepared in accordance with financial reporting frameworks of a contract. So as we discussed in SA 800, so if you are preparing the financial statement as per the requirement of the contract, so you have to that requirement will become the framework for that particular financial statement. So in accordance with special financial reporting framework of contract with Y Limited, she has drafted an unmodified opinion to be given in audit report. Besides, she has also drawn attention in draft audit report to note A to the financial statement, which describes the basis of accounting. Under the head basis of accounting, how she should ensure that report would not be misused. So she can give this para. So without modifying our opinion, we draw attention to note number A to the financial statements, which describe the basis of accounting. So this is for illustrative purpose only, friends. The financial statements are prepared to assist the company to comply with the financial reporting provisions of the contract referred to above. As a result, financial statement may not be suitable for another purpose. Our report is intended solely for X Limited and Y Limited and should not be distributed to. So there is a restriction on distribution or used by parties other than X Limited and Y Limited. So this will save auditor, right? Another case study is the financial statements of TEC and company have been prepared by management of an entity in accordance with the financial reporting provisions of a contract. Again, financial statement prepared as per a special purpose framework. Based on the contract, management does not have a choice of financial reporting framework because the contract become the requirement of contract become the special purpose framework. As an auditor, what considerations would be undertaken while planning and performing the audit? So as I mentioned, all these standards will apply in addition to 800 series. SA 200 requires the auditor to comply with all SA to relevant to the audit. In planning and performing an audit of a special purpose financial statement, the auditors will determine whether application of all the SA requires special considerations in these circumstances of engagement. SA 315, understanding of the entity's selection and application of accounting policies. In case of financial statement prepared in accordance with the provisions of the contract, the auditor shall obtain an understanding of any significant interpretations. So this is very critical area. If the used incorrectly, so the financial statements to be developed may be incorrect. So we have to ensure that the significant interpretations of the contract that might made in the preparation of those financial statements are correct. And interpretation is significant when adoption of another reasonable interpretation would have produced a material difference. Why we are concerned about the interpretations? Because if interpretations changed, then this might have the impact on the financial statement which we are preparing or the management are preparing for the special purpose. Case study 4, Mr. Surya is an auditor of financial statements of an entity prepared in accordance with the financial reporting provisions of the contract. He is also offered audit of trade receivables. So he is the auditor of a general purpose financial statement. He got the special purpose assignments as per SA 805 to carry out the audit of trade receivables also. Can he accept such engagement? So the single financial statement or the specific element of or account or item financial statement prepared in accordance with a general or special purpose framework, if prepared in accordance with special purpose framework, SA 800 also applies to it. In given scenario, financial statements of entity are prepared in accordance with the financial reporting provisions of a contract. It is a special purpose framework. The auditor of financial statement prepared in accordance with the special purpose framework is also offered audit of trade receivables in above financial statements, which relates to audit of elements of financial statement prepared in accordance with special purpose framework. Hence, his audit approach should include considering requirements of both SA 800 and 805. Next case study, like the CAG is offered appointment of audit of trade payables of financial statements of a company. However, financial statements prepared under Companies Act 2013 are audited by Jignesh. So auditor of a complete set of financial statement as per Companies Act 2030 is different. And for the element of financial statements, the special purpose auditor is different. Discuss why it would be practically difficult for CAG to perform such an audit. So we have already discussed this in previous slides. So the crux is because you can't do the audit in isolation. You have to apply the audit procedures in other aspects also. If you're doing the audit of receivables, as I mentioned in the previous example, then we have to do the audit of other connected line items also, right? So in case of audit of a specific element of financial statement, certain SA require audit work that may be disproportionate to the element being audited. If auditor conclude that audit of single financial statement of a specific element of financial statement in accordance with SA may not be practicable, the auditor may discuss with the management whether another type of engagement might be more practicable, right? Because you will have limited time and you will have limited information. I mean, how can you conclude on particular line item? So this generally would be very easy for the auditor who is doing the audit of a complete set of financial statement as well, along with the special purpose audit. CA Madhur is auditor of a company. This is second last case study, and after that last study would be there. CA Madhur is an auditor of a company and has issued audit report dated 15 June of particular year. The audit report on summary financial statement derived from such audited financial statement is dated 15 July. So there is the gap of around 1 month. That particular discuss whether there exists any additional reporting responsibility for auditor in such a situation. The auditor on summary financial statement derived from audited financial statement dated 15th June, 15th July. However, the audit report on audited financial statement is dated 15th June. In the above scenario, the auditor's report on summary financial should state that the summary financial statement and audited financial statement do not reflect the effect of subsequent event to the date of auditor's report on audited financial statement, right? And the last study is in continuation to previous example. Consider that the audit report on financial statement issued by CA Madhur for above said company contains qualified opinion. If audited financial statements already contain audited financial statement contain qualification, right? Can he issue unmodified opinion on summary financial statement? If auditor satisfies that the summary financial statements are consistent and in all material respects with or a fair summary of audited financial statements in accordance with applied criteria, he can issue an unmodified opinion. But there are conditions. When auditors report on audited financial statement contain a qualified opinion, then auditors report on summary financial statements and also contain following: the state the auditors report on unmodified opinion or report on audited financial statement contain qualified opinion, and this is the basis of that qualified opinion, and the effect on the summary of financial statements, if any. Hence, above points should be included by CA Madhur. Okay, so that's all from my side. Anilji, I hope friends, I'll was able to convey the requirement of standards as a 800, 805 and 810. Though time was little less considering the detailed and practical approach, but I hope I was able to convey the requirement and the considerations mentioned in the 800 series.
Yes, sir. Yes, sir. Thank you so much, sir, for detailed discussion on SA 800, 805, and 810. Chairman, sir, you are there? Chairman, sir?
Yes, sir, I'm here only.
Sir, sir has already done with the deliberation. I hope we have received 2-3 questions, because due to the technical glitch, we are unable to fetch more questions. So I hope you are having 2-3 questions for our today's learned speaker.
Yes, sir.
Yes, sir.
Thank you, sir. Thank you for your deliberation.
Thank you, sir.
We learned a lot from you. सर मैं पूछना चाह रहा था कि क्या ये मैंडेटरी है कि लास्ट फाइनेंशियल फिगर्स भी फाइनेंशियल स्टेटमेंट में शो की जाए फॉर नॉन कॉर्पोरेट एंटिटी?
For non-corporate, no, it's completely dependent on the user. I mean, what user want. If your user want the comparative figures also, in that scenario, we have to give the comparative figures also, right? But generally, but generally, if in case audited financials contains the comparative figures also, the summarized financial statements should contain the comparative figures as well.
And sir, who will decide the materiality for the audit consideration?
So the auditor needs to compute the materiality as per SA 320, right? What I'll tell you, Sumitji, what generally happened in such type of engagement is like, for example, there is an investor based out of UK, right? They are the big size entity. So they may say like, you have to carry out the audit for UK GAAP, but for us, if any transaction which is below 10 crore, it's not material for us, right? But SA 320 disregard these criteria. They say like, even if client is having some kind of materiality, but for that materiality for them only, for you, you have to compute as per SA 320. If materiality comes to say 2 crore, and as per client, the materiality threshold is 10 crore, then you have to consider 2 crores only, not 10 crore. And this is clearly mentioned in the standard.
Thank you, sir. That's all. Thank you.
Thank you.
Over to you, sir.
Thank you, sir. Thank you so much for wonderful deliberation. So now we come to our end. Sir, you have, hope our participants have gained a lot through your deliberation during this audit time. We have covered 700 series today. We have successfully completed 800 series also, and you have justified with your presentation, sir. So on behalf of AASB of ICI, once again, I extend my heartiest thanks towards you for sparing your valuable time as well as enlighten all of us, all our members with this 700 series. And I also thanks to Honorable Chairman of Yamunanagar branch, Shri Sumit Chaddaji, for sparing his valuable time and for the moderation of this webinar for 2 hours. Thank you so much, sir.
Thank you, sir.
Thank you so much, Sumit sir, Honorable Chairman of Yamunanagar branch. Thank you so much.
Thank you.
Thank you so
Thank
much,
you.
sir, for your wonderful deliberation also. I also webinar. Thank you, sir. Thank you, sir.
Thank you once again, Anilji, for inviting me for this special series, and special thanks to our chairman Sumit Bhai, who is here with us today, and my special thanks to the audience and the participants who are here and connected for 2 hours. Though there was a glitch for a few minutes, but yes, there are boon and bane for the technology. So, but anyway. It's my honor to be here, and I'll be glad to come in the subsequent session to be planned by the AASB. And I really want to appreciate the efforts done by the AA. And since I think these VCM was started from pre-COVID also, no?
Yes.
So you worked on. I still remember you worked on holidays also. So. So credit goes to the entire team of AASB, including Sanjeev ji, Vishal bhai, and you, Anil ji. Thank you so much, and thank you participants for joining us.
Thank you. Good day.
So with your permission, Sumit ji, Anil ji, I'll take your leave.
Yes. Thank you, sir. Thank you.
Oh, sir.
Good evening.
Thank you. Good evening.